Get on board, get on track, get to where you're going. And now, your edutrainer, national insurance columnist, Steve Savant.
Welcome everyone, I'm Steve Savant, your edutrainer and coach through our entry-level course, our workshops of life insurance. And we're brought to you by Lincoln Benefit Life, an Allstate company. And one of the reasons we've chosen Lincoln Benefit Life software, the Eclipse software system, is because it's the most user-friendly. And if you're learning life insurance for the first time, we voted it as the most user-friendly software. And that's why, if you want to go out, we highly recommend that you download their software right off their site at www.lblsales.com/ETW. That's lblsales.com/ETW. When you get there, you'll come to this page. You'll hit the Run Installer and download the illustration software, because we think it'll be great when we start getting into the actual pages of the proposal system that you can do it with us while we're doing it. So I'll be going onto a page, you'll be following us, and I think it's really a helpful thing to really engage you and make it interactive. Another thing is that we're handing out all the forms and documents that you see that we use on this screen are all in our patented life manual with a vocabulary list. That vocabulary is very helpful. In fact, actually, I would print it out if you're learning, you're coming from another industry, whether it's medical, PC, annuities, securities, banking, it doesn't matter. If you're coming into life insurance for the first time, what I would do is I would print the vocabulary separate from the entire manual and always keep it there, so when you see something, say, oh, it's in alphabetical order, you can say, oh, what does that mean again? And it's right there at your fingertips. You can order that at thebiz at brokersalliance.com. That's thebiz, THEBIZ at brokersalliance.com. Well, today we're really talking about probably one of the big upfront issues that we have to say when we're talking about life insurance, and that is the issue of how much life insurance am I going to need? So before we talk about the actual sheet that we're going to use, I want you to look at this because this stuns me. Now, we're looking at this page, and again, this is in the manual if you want it. What will inflation do to your estate? Well, they take the Consumer Price Index, which is the government statistical measure of the change of prices of goods and services. It's commonly used to measure the rate of inflation. Now, interestingly enough, it goes back all the way back to 1967, which they're using now as their baseline. So by the time we look at it, and let's just go forward all the way out to 2011, $1 back in the day, think about that, $1 from 1967, now it's 2011. You're thinking about what, about a 50-year period here, that dollar is worth 15 cents. That's how much erosion inflation has done to the dollar. And keep in mind that sometimes when we go to this, how much in life insurance, when we go to our worksheet, you're going to look at that and say, wow, that does not include, that's present day cost, that does not include inflation. So you may want to be able to look at this guide. Then it actually has in the guide, we have a history of inflation, so you can kind of get an idea, what do you think it is? Right now we're living in an era of not that much inflation, actually almost at the borderline of deflation. But when you're looking at costs and goods and services, which I believe is probably not in here, you really need to calculate whatever we come up with as how much life insurance that you need. I may want to also accommodate the issue of inflation. Now, I want to do a quick review on the capital needs analysis worksheet. Now, the reason I like this is because yesterday we were talking about life events. And so when I put the client's name and date in here, what events will cause significant reduction in your annual income? What would happen? What life event? And remember, you can be able to print the life event out and go through any of those events with your prospect or with your existing client. And as you're walking through all the life events, you can start to put these events in here so that they actually walk through it with you. So you're just taking what's already on the life event checklist, and now you're applying it to your actual interview with your client. And if any of those have occurred, is it same as it was now? Is it better than it was now? Or is it lower than it is now? I want to know what events had impact on your lifestyle. And one of the heads up, more and more I'm using this term lifestyle continuation. It's kind of a hip Gen X, Gen Y expression, because it's not so much about sometimes coverage or protection or even indemnification, but it's the continuing of our lifestyle. And is it going to be the same? Is it going to be better? Is it going to be worse or lower than it is now? I want to fill in my checklist and start going through it. And here's one of those issues. Current annual household income. I want to know, especially if I have dual income, how much am I getting from earned income? How much money am I getting from maybe interest, from savings on my assets? What's my current annual spending? And even though we're not showing the budget today, we actually could send that. That's separate from the life insurance manual. If you say, Steve, I'd really like to have a basic budget, maybe you're using it for yourself. If you do it with yourself, you can do it with your client. And that budget will say your current annual spending. And that's where I want to look at, because I want to say, what's my actual current household income, my savings, what am I getting off savings, and then I have to subtract, what am I spending? What am I saving for college? What am I saving for retirement? What am I saving for a new car? Maybe I'm saving for a larger down payment for a larger home. All those things come into play. Income available in meeting these needs. Well, maybe, as I said, a dual income. You might be a dink or a dirk. In last week's course, we said dual income, no kids, or dual income, raising kids. If my spouse is working, I'm going to include that income. And if I'm older and I'm still working, but maybe I'm taking constructive receipt of Social Security, which could happen. So we have people say, hey, I just need it now. I can't wait till I'm 66 or 70. I'm going to take it at 62. You'd have to be able to put in Social Security income, just heads up. If you have income coming from these two areas, yourself and your spouse, just remember, that's going to be included in the provisional income test, and your Social Security more than likely is going to be taxed. How high depends upon that income. You may have other income that we're not talking about here, just generic income. Here's money that I receive all the time. And then I want to be able to total all those on my line, and then I want to know any additional income that I need. What do I need? Am I really short still? Where am I going to pick it up? Am I going to have to reduce my expenses? Or do I know I'm going to be getting an inheritance? Or do I have some kind of lottery income? Whatever I need to put that in there. And then I need to look at my current savings and available capital if I had to tap it. So if I run into a cash flow shortage, how much money? The old rule of thumb used to be 90 days in cash, so that you could take care of anything. If you lost your job, you couldn't do anything, you always had 90 days of cash to pay all your expenses. In today's lifestyle, and especially with the market in employment, I think that number is more like 6 months. So it's time to have a lot more liquidity, have cash in case things happen, and that calculation will be pushed in here in our capital needs analysis worksheet. Again, all in our manual. You can order it absolutely free, thebiz at brokersalliance.com. Then you take all that and then you assume a net rate of return. Now, right now, I'm kind of conservative. So if you're a long haul thinker, I think 3% is about the top out rate that you should be using right now. Most annuities are between 3.3 and 4% on 10-year platforms. So when I look at that number, you're probably not going to do better than that. So I say probably the most conservative that you should be, or your top line of the conservative should be about 3%, so that you can figure out, hey, if I did all this and I had 3%, how much will I have at retirement? Will I have enough to pay off the home? Will I be able to take care of all my student loans, my college obligations? And then the last part here is any income shortfall. Do I anticipate any income shortfall? Or remember, that can also work in reverse. Am I going to have an income bonus? Perhaps your boss at work, you're going to be able to receive a Christmas bonus, or maybe yours is on a quarterly basis based on performance. You might be getting quarterly bonuses and then a Christmas bonus. I want to be able to kind of guesstimate, bring an estimation into our capital needs analysis worksheet. Once I've done that, I have a pretty good understanding in the general sense. If I want to really get into here and micromanage what do I think I need on insurance, then I'm going to look at this sheet. Again, it's in our manual. You can just order it, thebiz at brokersalliance.com. Annual living expenses for survivorship, for survivors. So I want to know my spouse, my children, grandchildren if I have obligations, and I want to know what is my after-tax living expenses. Remember, I have to pay taxes. If you're a W-2 like I am, we're going to have our taxes taken out. All that's going to come out first. So I want to know what's my after-tax living expenses. So I say, here's my expenses, and here's what I have to pay for it, and then the average tax rate. Now, here's an interesting thing, and I have this if you want to order it. I have what's called the Marginal Tax Bracket for single and married, even ahead of household. If you want it, just can order it at thebiz at brokersalliance.com. But that rate, that marginal tax bracket, I call it a marginal blended bracket because nobody actually pays one specific rate when you start making money probably past about $30,000. So we're actually having a blended tax bracket. And to figure out what is that, so I can plug it in this number, just order that and I'll be happy to give it to you, thebiz at brokersalliance.com. The tax factor, once I know what is my tax bracket, I'm going to put that number in there so I can see here's what I'm obligated to. Here's what's coming out of my check. Then I want to look at, do I have any Social Security benefits that I'm taking in as accounts receivable? Do I have survivorship pension benefits coming in as an accounts receivable? Do I have any survivor earned income? My wife has her own accounts. I want to look at that income. And then I want to be able to calculate this and figure out what my annual net living expense shortage is if I have any. So I'm trying to not only accommodate my earning ability, but what shortages will I have if death occurs? Number 4, capital required to produce income to meet annual living expense shortages. Now, most carriers, not all carriers, but most carriers, even if you were a young physician and you were just starting out in your practice, they're going to say, well, he's making $100,000. We're going to give him 15 to 20 times income. His assets may not even be anywhere near $1 million to $2 million, but because they're looking at his earned income. So when I look at all my balance sheet issues and I add on top of that, my earning ability, that's got a price tag to it. And if I went back to the inflation chart, I got to put that on top of it. I can actually argue from a mathematical point of view, and especially if I have human longevity, if I have serious longevity in my family tree, I'm going to need even more. I can be able to calculate and give a summary statement where I can prove why I need this in life insurance. And by the way, justification, I've used this sheet for so long because we've been using this service. This sheet is so great because I can usually attach this to a life insurance application. I put in the memo box, please see attachment, and I show them everything I've done to accommodate this. Most of the time, when you fall short in justification, you miss so many things on how much life insurance is. And if you just go through this simple, easy, it is very simplistic, I agree. But if you went through this, you would be able to calculate a true need. Almost every person I've ever met that has ever had a death claim in their family probably saying to themselves, I probably should have got more. I didn't really think through all the possibilities. That's why I like this sheet. How much life insurance? It accommodates. Then I also want to know things like final expense and estate costs. Think about this. If final expense and medical expenses and last ordinary income 1040 tax that I have to pay, all that has to be done, why do we always wait till we're into our 60s to buy final expense insurance? This is a part of insurance that will never go away. We know that's a permanent liability. And that's why when we teach about, is it right to do term and invested difference? Do I believe in permanent insurance? We're going to get into the math and let the math make the decision for you and let it argue in your mind. Because when I look at this, most of the people that buy final expense or other insurance to protect their loved ones are buying it in their late 50s and early 60s when they could have bought this a long time ago at a very small and cheap price. So when you're thinking about final expenses, or I want to pay off my mortgage, I want to be able to settle all my credit card debts. I want to put all my policy loans on. I want to even include, if I don't have one, if I wasn't around, I want to create an emergency fund, kind of like that 90-day to 6-month period that I was talking about. And I want to be able to calculate all that and figure out everything I have. And then if I have any other producing assets, could be stocks, bonds, mutual funds, limited partnerships, I just want to look at every single piece of income and put that out there, attach an inflation number to it, do my total calculation, and then add on my earning ability. If I have 20, 30 years and I think I'm going to earn this, I want to be able to cover my potential earning years and cover that for my spouse, my children, grandchildren, charity of choice, or my business partner. That's How Much Life, and it's in your manual.
This has been an Edutrainment Workshop, the educational division of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, and sponsored by Lincoln Benefit Life, an Allstate company.